Welcome, everyone, to the New York Legal Tech Meetup.
Recording has started.
Recording. Welcome, everyone, to the New York Legal Tech Meetup. The New York Legal Tech Meetup, as opposed to the NYC Legal Tech Meetup, those of you on our email list, notice we did a little rebranding. People were calling it New York, so we're just going to turn into the skid and call it the New York Legal Tech Meetup. Thank you guys so much for being here. A quick show of hands. How many people are first-timers at one of our meetups? Okay, that's great. It looks like about a third. Before we kick into things, I'll give you, for those of you who are new, a very brief overview of what we're trying to do here. There is a really interesting, fun, cool, nascent, growing legal tech kind of community and ecosystem out there. And I loved it when I showed up and started to get myself immersed in it. But I got very frustrated by the fact that it would kind of come together around events in an ad hoc way and then just kind of disappear. And I was constantly running into really interesting people doing cool stuff over here, people doing cool stuff over here, and these two not knowing what the other person's doing. And I thought there was a real opportunity to help create some structure around it, to help create a more coherent and cohesive ecosystem where we can support one another and we can know what other people are doing. And so we launched this meetup group to try to make that happen, and it's been growing gangbusters thanks to all of you. So thank you guys so much for showing up. As we'll talk a little bit about here tonight, we really are trying to grow a community that's very kind of open and supportive. So don't be shy to reach out if you need help with something. And please mix and mingle. I love the fact that it took me like 10 minutes to get you guys to sit down. That's a great sign that people are actually networking and mingling and creating connections. Before I do anything else, I want to say a very big thank you to our hosts and sponsors here, Dentons. And I'd like to bring up Chris Errico, who is our kind of internal champion, to say a few words. Chris.
Hey, so just want to welcome you all and say thank you for coming. Got a great event tonight. Really appreciate Christian putting it all together, and appreciate all of you coming out. Also like to thank the panelists who, so graciously donate their time to us. If you don't know anything about Dentons, Dentons is a global law firm, probably 8,500 lawyers around the world in 150 or 100 plus countries. Our venture technology group really focuses on working with emerging growth companies kind of in all stages of their development. So whether it's, one or two people in a garage somewhere to, public company looking at, an M&A event, we represent everything in between, mainly in life sciences and technology, and then also representing the investors that make investments into those companies, both on the strategic side and also the venture capital side. I'm co-chair of our startup program here at Dentons, which means I spend the majority of my time working with the earliest stage companies, so kind of organizational stage, Series Seed stage, Series A stage companies, helping them to kind of grow and raise the capital, and then quarterbacking kind of all their outside legacy needs. Obviously, Dentons is very committed to the legal technology space, given Dan Jansen's involvement with Nextlaw Labs, and I'm sure you'll hear all about it from him. But just wanted to kind of give you the spiel on Dentons, and hope you all enjoy today.
All right, well, thanks so much for the firm for having us, and the pizza and the beer. Please, this is a very informal, this is a meetup. We treat it like a meetup. Feel free to grab drinks in between. Try not to obscure your neighbor if you can help it. All right, the first thing we do at the beginning of all of our meetups, for those of you who are new, are these things called community intros. In order to help facilitate the creation of the community, you need to know who the other people are and what they're doing. So we like to bring up 4 to 5 members of the community at the beginning of each meetup to give a quick 30-second hello, tell you who they are, what they're working on. Maybe they're hiring for a job or looking for a job or have another event going on or whatever the case may be. So can I have Jonathan, Aki, Tunji, and the Deal Whip team, and Felicity come on up, please? We can clap for them, yeah. Jonathan, you want to kick us off?
Yeah, sure. Thanks, Christian. Hey, everyone. I'm Jonathan Petz. I practiced corporate bankruptcy at Mofo for a few years and left to start a consumer-facing startup that helps people who are too broke to file for bankruptcy. So it's called upsolve.org, and it automates a fresh start for folks who can't afford a bankruptcy. And we are funded by Mark Zuckerberg, Eric Schmidt, and because we're a nonprofit, we get to break all kinds of rules relating to unauthorized practice of law, which is really fun. We're looking to hire full stack, and especially front-end developers. So if you know any good developers who are interested in our mission, I'd love to chat with you. Thanks.
Hello, everybody. So I'm relatively new to the legal domain. I've just recently joined a company called Elevate Services, and we have a software products group. We're hiring like crazy right now, and specifically we're looking for sales engineers. So if there's anybody out there that gives a killer demo, that likes explaining things to people, you're the person that we need. As well, I'm in product marketing, and we're always looking for users for user research to kind of test out some ideas or things that we're working on. So you probably can contact me through, I guess, the Meetup, right? That's probably the easiest way. My name is Aki Liao, and thanks very much.
Hi, my name is Tunji Williams. I am co-founder and CEO of a company called DealWhip. I'm new to the Meetup, and I'm also new to New York. I just got married a couple weeks ago and moved to Brooklyn last week. Thank you. So our company, DealWhip, the WHIP in DealWhip stands for Workflow Integration Platform, and I'm here with my two co-founders, Alex Nordham and James Clark and Breslin, and we're all recovering attorneys, corporate and M&A, and we built a web-based, a cloud-based workflow and collaboration tool for corporate legal transactions. So that's what we do. Based in, is that all the time I got? We're based in Brooklyn. We started back in June of 2017. We went through the LexisNexis Legal Tech Accelerator out in Silicon Valley last year, and we just wrapped up the MDR Lab program in London this summer, which was awesome. So if you have questions about that, we're happy to answer them. Thanks for your time.
Hi, my name is Felicity Conrad. I started a company called Paladin. And what we are is a pro bono platform that helps law firms, companies, Fortune 500 companies, law schools, and bar associations manage their pro bono programs, streamline their pro bono engagement, and hopefully get more lawyers involved in pro bono work. In terms of what's relevant right now, I feel like a lot of us have been reading about family separation at the border and thinking about how do we use our legal skills for good. So would just love to throw a shout out for pro bono work. And if anyone's interested in talking about how to get involved or how to think about that kind of thing, I'm available. Thanks.
All right, thank you so much, guys. All right, here's how this is going to go. I've got 3 quick announcements to make for you guys, and then we'll kick off the panel that everyone is here to see. The first announcement is about a new little initiative we're trying to get off the ground. We like to think we have some cool programs, but legal tech, covers all manner of sins. Like, we kicked off with a really interesting blockchain event and brought out a bunch of people who were interested in distributed ledger tech. We did an AI event. And I've started to realize there are these little sub-communities of interest within our Meetup. And so we are trying to find a way to make sure that we are kind of activating those and adding value to people with those interests. So we're starting, we have a very nascent kind of working groups effort on specific topics. We had a informal drink around this at the last happy hour just beforehand for AI and blockchain. I've talked with a few of you about some potential other new working groups. If you would like to be a part of getting together with people around a particular area of common interest, maybe help with our programming in that area or something, by all means get involved. The way that we're running that in between meetups and in between meetings is through point number 2, which I'm going to mention, is our community Slack. We want people in the meetup to have an ability to kind of connect and chat and talk in between the monthly meetups. And so to create that space, we've launched the Slack community. I think we've got 75, 80 people in it right now. It's just kind of starting to get big enough where you can start having real conversations on it. When there's job opportunities, you can post it on it. But it's really good for something like a working group discussion. So on our website, which you can see in the top right-hand corner, nylegaltech.com, you can find a sign-up form for Slack. If you're interested, please join the Slack. And then finally, our next event, for those of you who are new, we do 3 types of events. We do substantive panels like this. We do a drinks and demos type event for like a demo pipeline so you can see what's going on in the market. And we have informal happy hours. Our next event in August is one of the drinks and demos events. So if you work for a company that you think you would be interested in sharing with this community, please, there's a form on the website you can fill out as well. Let me know about it. We'll have a look, and we'll try to put together a really cool cohort for you guys. All right. without further ado, we're going to get into the panel here. And because it took us a little while to get started, we're running a bit behind. I'm going to keep my introductory remarks very brief. I'm really excited about this one. One of my frustrations with legal technology, as much as I love it, those of you who have been to these meetups before or spoken with me offline know this, is I can get a little frustrated by how kind of hype-driven the conversation is. There's a lot of loose language. People are very focused on frontier tech like AI and blockchain, and there's a lot of people just repeating things that they just heard from other people. There's not a lot of, precision that's helpful and constructive, I feel like. And that's one of the reasons I'm so excited about this conversation here tonight. Our 5 fantastic panelists, quite literally in their job, have to put their money where their mouth is and evaluate where the tech is, where the opportunities are, what will people actually use, what will they pay for, what will get traction and grow and provide an exit that would make people money. So it's a really great way, in my opinion, with that investment lens to kind of cut through the hype and understand what's going on on the ground. And I think we have a really interesting cross-section of folks who are going to offer you their perspectives tonight. We have people who invest specifically in legal tech, and are kind of specialists in that area. We have people who are more generalists and will be able to maybe have an interesting take on why legal is kind of weird or different or interesting. We have some people who have crossed over from one to the other. We have some people who are out in the market trying to raise new funds right now, so we'll have a really interesting perspective on to know how is it being received in the general market? Are people really interested in this? Do they think time is right? Those of you who have been in the space know people have been talking about being on the brink of a legal tech revolution for going on 20 years now. So I'm really excited to kick this off. And the format of the panel is as follows. I would love for it to be as collaborative as possible. So if we're talking about something that you're interested in, by all means, raise your hand. I've got a mic up here. We've got some friends who are going to run the mic around. We are recording this, so if you don't want to be recorded, your voice recorded, or people on stage, obviously their faces are recorded. Don't put your hand up. But if you want to ask a question, we'll get a mic to you so people can hear it. I'm going to kick things off with a little bit of a moderated discussion, but hopefully we can transition, at some point in the middle to having a more audience-driven dialogue, because we want to make sure we're giving you the opportunity to hear what these guys have to say, because they have a fantastically interesting perspective. And with that, if I can get our 5 fantastic panelists to come on up stage and join us, we'd appreciate it. All right, so you can put those on your collars, and there's a button that you press and get a green signal, and we'll kick off.
You break your box.
Yeah, exactly. Excellent. All right. Well, rather than butcher introductions for these folks, I'm going to let them introduce themselves. Panelists, here's the drill. Before we do anything else, we're going to go down the line. Give us a quick 30 seconds about who you are, who you're currently investing with, and kind of what that entails, whether if you're in the legal space versus not. Let us know a little bit about your investment profile and background so that the people in the room kind of know where you're coming from. Dan, you want to kick us off?
Sure. Dan Jansen, a sentence I've said a few hundred times is here. I'm not a lawyer. I'm a serial entrepreneur, and I've worked in professional services. I was at Boston Consulting Group, ran their big global media practice for a while. Legal tech is fascinating to me. I always say it's fintech's little brother because I think it's about 10 years behind, and therein lies the opportunity because we think the potential to disrupt the $600 billion global industry is significant. I run something called Next Law Ventures, which is a legal tech-focused early-stage venture fund, and we've invested in 10 companies in our first fund. We've now closed out that fund, and I'm raising a larger fund too. In my first fund, Dentons was the largest investor. In our second fund, they're going to invest, but we're bringing additional outside investors in. And it's what I call my unfair advantage when you have the world's largest law firm and there are hundreds of thousands of clients, and we have something called the Next Law Referral Network, which has 600 small to mid-sized firms in it. That's my ecosystem. That's my ability to look at any product in any market, in any practice area or sector area.
Great. I'm David Perla, learning the lesson not to follow Dan Jansen.
Did I take too long?
No. You can't compete with that.
Oh, please.
So I started life as a lawyer, a large firm, and then in-house first 10 years, and then became an entrepreneur and built a company that we sold to Thomson Reuters in 2010. I stayed there a few years and then left and ultimately went to Bloomberg Law and ran Bloomberg Law for 2.5 years. So I've sort of seen practice life, startup life, exit life. Along the way, by the way, we raised 3 rounds of capital, seed plus 2 traditional VC. And most recently, I joined Burford Capital, which is litigation finance, legal capital. I run business development and marketing. So my real sort of passion, in addition to the personal investing I do in legal and legal tech, is also the go-to-market. I spend all my time professionally thinking about how to bring new things into the legal market, including working with the companies I'm invested in on those strategies.
All right. So I'm following 2 people with really good stories.
We should have separated the Davids, though, shouldn't we have?
Yeah, and we actually know each other. So David was incredibly helpful to me. So anybody who's looking at him as an investor is actually quite helpful. I'm David Mars. I'm an investor in a broader set of things beyond legal. I've got one investment in the legal tech space that we sold to Lexus a number of years ago. It's called IntelliGize. I run effectively a family office, but for multiple families, only looking at high risk, high reward investments. So that tends to be sort of all early stage, but it does run the gamut from private all the way up into public equities and public debt. And we look at just about everything. I mean, the things that I think I lost this thing. Yeah. This one seems to be going on and off. The things that I like about this market is you have a reasonably big audience that wants to be more efficient and has the penchant to pay. I think it's also got drawbacks in the total overall size, and I'm sure that we'll get into this on the panel. But thank you for having me.
Well, hi everyone. I'm Jules. So I think I started as a legal tech entrepreneur. So I know Dan is also an entrepreneur, but I think I'm the only one on the panel that has raised money as a legal tech entrepreneur, and it sucks. It's really hard, and I empathize with all of you who are doing that. So I have transitioned. So I started a company called Hire and Esquire, and then a company called Evolve Law, which was acquired by Above the Law. And then for the last 2 years, I've been at a venture fund called Lunacat Ventures, where we do a mix of debt and equity investing. We're not exclusively legal, but I've looked at several legal deals, and then so much so, I thought I was out of the legal tech space. I'm also not a lawyer. I was like, all right, I'm done. I did it. It was painful, but I moved on. I had to come back to it because I think the opportunity is still here. So I'm launching a new fund called Pros Ventures with 2 very experienced legal tech investors in the space, too, Jeroen Plink and Mike Sushland. And we are investing mostly in legal and compliance tech with a little bit of wider professional services technology. So that should be hopefully ready to be investing by the end of the year.
My name's Alex Katz. I'm a managing partner at FF Venture Capital. We don't exclusively invest in legal tech companies, but we do have a couple in our portfolio. I'm a recovering lawyer as well. And what attracts me to the market is the fact that when I practiced law 25 years ago, thinking back the way I did it, it's just ripe for disruption. And as you said earlier, if people have been talking about disrupting the industry for 20 years and people are still doing it the way I did it, then there's a lot of money to be made for a lot of people in this sector.
Perfect. That's a great segue, actually, to the first topic I want to hit with you guys. So a number of you raised it in your introductions, but let's first spend time on the big picture. What is the investment opportunity presented in the legal space? So you referenced it, like Dan. Let's start with you. You gave us like a top line. You think there's a great opportunity here. Let's dig in a little bit. What has created that opportunity? What are maybe the obstacles to tech adoption that have kind of given rise to this? And then how does that map on to kind of your investment thesis and strategy when you're looking out, in what to invest?
Well, I gave an entire hour-long presentation on why law firms and corporate legal departments don't adopt legal tech, so I'm not going to attempt that in 30 seconds. Happy to send it to anybody who wants it. The opportunity, I mentioned the $600 billion-ish globally. It's one of the few items that's growing as a percent of revenue on corporate P&Ls, and yet there's still a pretty large legal services gap. So the CFO and the CEO are beating on the general counsel to start figuring out faster, smarter, better ways to do it. And the response we're seeing is institutional money is coming in, and legal departments are adopting these tools and technologies. So the number of companies has exploded. 5 years ago, we couldn't even find 50. Now we count almost 1,400. So that pressure to manage the cost and to manage the risk and to do it at a lower cost is leading to this explosion in these legal tech companies and an explosion in the ability of software to find really scalable solutions.
It's a great answer. I mean, clearly there are some pressures that are helpful to facilitate the opportunity, but why does the opportunity exist in the first place? Alex, you were saying 20 years ago, some of the same challenges done the same way. What are the drivers there that you see?
Well, as a consumer of legal services, when we engage a firm to represent us, when we make an investment, we insist that they agree to a fixed fee. So they have to be concerned about their costs, and they have to find cheaper, better ways to do the same product, to deliver the same service, yet in a professionally competent way that they would if they were charging by the hour. So that creates the pressure that Dan's talking about to continue to make the profits. If your top line is going down, then your costs have to go down. I know that as a CPA as well.
Yeah, absolutely. David Mars, you and I had a conversation on the phone where you mentioned that a lot of your investing happens in regulated industries, which I think may dovetail with this conversation. Why are there opportunities in regulated industries? Why do you focus there? Why is that important?
Yeah, I mean, I think it is similar to the legal space because you have a bar that has to be met by entrepreneurs. If they can't meet that bar, they're dead in the water right out of the gate. So you tend to not wind up in those investments. If they can go above that bar and actually build a business, there's a lot of barriers to entry for the next person to come in. And oftentimes, if you have a really great company, they take the bar and they bring it up with them, which kills everybody else. So it's a little bit of a monopolistic view of the world, but I think it fits, and it really does fit well with the legal space because you guys do all the legal work, right? And these regulated industries are paying probably a disproportionate amount of your bills. And so, they kind of go hand in hand. I also think in the regulated space, similar to the legal space, they're operating with technology that, frankly, is really old. I mean, I remember when we came in with IntelliGize, they said, oh, yeah, you got to work on Internet Explorer 2. And I was like, are you kidding? Like, I didn't even know people use this. Microsoft doesn't even have updates for it. So, but the big law firms were still using it at that point in time. So I think there's a real opportunity for that.
I think that's exactly right. We recently made an investment in a company called Doc Authority. They were focusing on a way to let enterprises know who has access to what files and what's in them, and how to block that access. But then the EU passed GDPR, and that changed the universe. And now their focus is GDPR. For those who aren't familiar, GDPR is a European regulation that says that companies need to have access to their files. They need to, when requested, delete the files that people ask them to delete. The right to be forgotten, you may have heard about as well. So they're applying a technology to the problem, and as laws get more and more complex, the solutions have to get more and more complex.
Yeah, that's interesting. It sounds like there's some built-in kind of natural analogs. So, Dan, you mentioned you consider legal tech to be fintech's little brother. Does anyone have a view on where are the best lessons for us if we want to see an adoption trend or understand where we should be looking? Like, where historically can we look to understand how we should map out the evolution of legal technology over the next 5-10 years? Is it fintech? Is that the best example?
I think fintech's too broad. I think any sort of like accounting-related software is probably the best analogy. I think the Big Four accounting firms in particular are way ahead of the law firms, and it's probably the best analog. I think the law firms will eventually start looking like Big Four accounting firms at some point in the future. I want to actually just kind of mention something on your previous question, though, which is where is the opportunity? The opportunity is clear. Every investor that I talk to as a founder, every LP that I talk to as a venture fund raising money, is clear that the opportunity is big. Legal is the last bastion of kind of Luddite industry that's not using a lot of tech, even though there is some tech. The idea is that the execution is what's important. There's no question that the opportunity is there. Is that can entrepreneurs sell into legal? Can they actually make any progress? And that is yet to be determined, I think. And if you look to accounting world, for example, you can see what's been successful and what hasn't, and what they've adopted and what they haven't. And I would analog your companies to that industry.
Any particular reason you think why it's an open question in legal, whether you can execute, whether you can get that done?
People can't do it. Like,
Yeah,
it's
I
hard.
don't know, Jules. I hear you, but largely on straight legal tech. But I don't tend to analogize whether it's fintech or not. The main difference between fin and legal is fintech is trillions of dollars, no matter how you slice it. Right, which is why so many people play in it. But I think if you look at any startup, they do one of two things. And Alex, you just pointed out one side. You either solve someone's pain or you provide them gain. Right? And what the company you invested in figured out was GDPR was going to cause significantly more pain than whatever else they were doing before. Right? We figured that out at Pangea 3 when the financial markets collapsed. Cost for legal departments became incredibly painful. They all had to cut costs. Law firms had to show how they were cutting costs, and suddenly we went from being kind of a nice to have to a must have. Okay? The question I always like to ask, and this is why I get to like, can you sell or not, is what are you selling? So when I look out at the legal market today, I assume everyone follows the stats, and let's just put small law aside for a second. It's a very good time to be a partner at a law firm. And lest you think the sky is falling, just read the numbers. It's actually, I'm very close with Brad Hildebrand, and he'll say there's a lot of talk about, how the sky is falling on what remains the most successful professional service business in the world. Okay, it's very good to be a partner at a large law firm, even where people are struggling, even where they're hustling for business. Okay, so are you solving pain or are you providing gain? And the question I always like to ask is, you can sell, law firms will buy things, GCs will buy things. They buy plenty of tech. Depending on who you're selling to, are you selling them, or are you solving their pain? So if you talk to a large law firm, right, and you want to leave with an idea, we mapped it. A bunch of us didn't feel like doing it. Talk to partners at law firms, guys my age. I won't tell you how old that is. But they've still got some career in front of them and some career behind them. Okay, they're earning, but they know the world is changing. What they'll tell you is figure out the revenue model for me. Figure out a way for me to make sure I can keep making the kind of money. It used to be every year we raised our rates, and that's right. And every year rates went up, and partners made somewhere between 8 and 15% more. Those days are gone since 2009. But it's still a good business. So what's interesting is you don't see a lot of people talking about how do we help law firms gain? How do we help lawyers gain? It's all about sort of cost savings and efficiency, which I like. But when you talk about that, and this is what you're saying, it's really hard to sell that stuff because most times the pain is not that acute for the person, okay? The other thing I said to you, I'm a go-to-market guy. The other piece is who are you selling to? So I had a conversation. This is very often people are talking to the wrong people. If you look back at what PLC did, everyone know PLC? Practical Law Company. It's also bought by Thomson Reuters. Real success. Arguably, whether it's tech or not, but a real success. Today, you could do with tech what they did with people. They solved pain, but the pain was not partner pain. The pain was associate pain, and they didn't talk to partners for 5 years. They talked to associates. And they got them addicted, and they gave it away, and then suddenly how many of you practicing lawyers? Okay. Transactional? Okay. How many of you, keep your hands up if you don't use it? Okay, one guy in the back, one guy here. You have it. Why? They sold to the person who felt the pain, and when they had a chorus, the partners were stuck, and they had to pay for it. And that gets very much at, they figured out they were solving pain, but it wasn't partner pain. And I see this, there's a company I was invested in, we got out, it's fine, we did well. But they were selling something to partners that really solved associate problems. So that gets at what exactly is the tech doing?
Well, that interesting, it resonates very much with what I would imagine the Intelligize story to be, David Mars, because who knows Intelligize? Any securities lawyers, that sort of thing, M&A lawyers? You got to go try to find a bunch of documents in public filing, a bunch of clauses in public filings. It's a nightmare, but it's a nightmare that's really borne by junior and mid-level associates at 3 in the morning, not the people who are holding the checkbook. So what was the Intelligize story on that?
Yeah, I think it was workflow efficiency combined with better output, right? So when you're creating your filings for your client, if you miss a risk factor or don't really know what's the new risk factor, why is Facebook putting in XYZ risk factor and I'm representing Google? I better know that, and I better know why, and I better think about that might need to be incorporated in my documents, whether it's risk factors or it's looking at what employment contracts look like, things of that nature. So we just tried to look at it from a workflow standpoint, and it tends to start from the bottom up, right? Partners sell, and then partners also do the important, really hard lifting, or whatever you would call it, if they're in court or if they're in front of a client or whatever it is. But the people below that who eventually will be partners, they actually have to do all the work. It's kind of like looking at an investment bank, right? If you try to sell to the MDs only, they don't even remember what an Excel spreadsheet looks like. And so you've got to, if you're doing something that's Excel related or improving it, you better get a line of all of the associates and analysts on board with this. So I think it's the same thing. Once people were using it, you really had people almost pushing the sale forward versus you trying to pull them in.
As a startup, that's a really tough proposition, right? So if you're selling to the people with the pain, and like you said, they didn't talk to partners for 3 years, can you survive for 3 years without raising money, without revenue? It's a question, and you should be prepared to do that if that's your strategy. So raising money on top of that strategy is very challenging, and it's something that might work as a business, but might not work for VCs that you're pitching. So just keep that in mind.
Well, so this is again a perfect segue. So we've identified some complications. I hear this all the time, how complicated and what an interesting Byzantine kind of dance it is to sell into law firms. I'm curious to hear from you, Jules, and Dan, from you as well. When you guys are out pitching an investment thesis to invest in this stuff, and other people you're talking to, you're trying to get big checks from people that you're going to go out and place it. What's their reaction? I don't know. Did anyone see Dan Lear's blog post that he wrote kind of in response to this event earlier today? Yeah, like he told a story in there about how he talked to, I think it was Bill Henderson. He was referencing a Bill Henderson blog post where he talked about a lot of the Y combo guys don't like to get involved in legal tech because they don't know it that well and they're always scared of lawsuits. When you go to the people with the deep pockets to try to raise the big checks for the funds themselves, what are the reactions you're getting when you're pitching them legal tech in light of some of the things we've been hearing for the last 10 minutes?
Well, first of all, I feel your pain. Most of my life, I've been an entrepreneur trying to get money from VCs. Now I'm the VC trying to get money from LPs. Off the record, I'd rather be you guys, because VCs move faster and are more responsive. LPs are kind of a secret society that's hard to break into. Part of my argument is, with all due respect to VCs, the herd mentality is staggering, right? It's like watching my 6-year-old play soccer. All of them are trying to kick the ball at the same time in the same place. So I tend to go to the other side of the field and hope for a pass, right? And so I happen to think the lack of focus on VC is creating the opportunity. The lag in the legal industry's adoption of software and technology tools is an opportunity, not a problem. So I always make the argument, if you are interested in the next thing and you have some space in your portfolio strategy for legal tech, the competitive playing field, I'm sorry for the sports analogies, but there's way fewer players on that field than there are in fintech. For example, I think we might have been the first legal tech focused fund, at least the first one I was aware of. Our deal flow is overwhelming. And so when you pitch to LPs, they want to know what's your point of differentiation, what's your track record, what's your unfair advantage, how good is your deal flow, how good is your team at monetizing those opportunities. So I'm slipping into pitch mode here. So like when you make those arguments, they will quickly sort themselves. I'm sure Jules is experiencing. Some of them say, yeah, totally get it. Some of them just say, come back when you're on Fund 4 and I can see your track record. And you don't need to win every argument. You just need enough to fill out your fund.
Yeah, so it was a very similar experience, and I raised money for LunaCap, and then I'm now raising for Pros. And interestingly, talking about legal tech 2 years ago and now is different. So I think the market is shifting a little bit. I think LPs understand that there's opportunity here. They also really like vertical funds. So if you have a specific focus, whether it's legal or something else, that can get you a long way. So I think it's not different from raising money as a founder. It's just a little bit longer and more painful, if you can imagine. It's worse. So it is really proving that you are the best in that space. There's a reason you're focusing on that vertical and that you can add value. So like Dan mentioned, one of their benefits is their network of law firms. We do the same thing. It's a platform model, which Andreessen Horowitz really did. I think you guys do a platform model as well, right? Where you've got real dedicated resources to helping in a particular area. For us, it's sales. So if every company we invest in, we need to be able to help in sales, meaning we can make 20 introductions and you're going to close 10. And that to me is the value add in legal, because that's where the pain point is in legal. So having what is your unfair advantage, where can you add value that non-specialist investors are adding or can't add value, it's that real focus and it's that network and being able to help. For me, it's being able to help close sales, because that's what the name of the game is in legal tech.
The one thing I'd add is almost all limited partners, I know you guys are focused on the other side of the equation, many of them are recovering lawyers. Home offices are often led by lawyers. The investor groups often have lawyers or former lawyers in it, or they have had a bad experience with a lawyer. So when you start to describe the pain points that your technologies are solving, they're going, yeah, I felt that. So I think there is an ability. My last company had 3 different law firms working for it. I wish I had half of the solutions in my portfolio back then. So they kind of get it, I think, a little bit.
All right, so I want to bring this to David, who you did a legal deal a while back, and you didn't say another one. Is the reason why you got scared?
No, I was going to say there's actually something that you said that I touch upon, and I hope nobody's offended by this comment, but most legal tech startups are started by lawyers. That's really good and really bad. And the really bad side to it is that lawyers in general aren't used to managing a lot of people, and they're not used to managing people that they can't just tell, go do this, right? The sort of associate partner relationship at the end of the day is almost like hazing, right? You tell them what to do, they're here, they got to do it, they have no choice. When you're working in a startup and you're paying somebody 40% of what they could make in another occupation, and especially when they're lawyers, they're making 20%. Associates can make several $100,000 a year, whereas who in a startup makes several $100,000 a year? A reasonably well-funded one, and only the CEO. So, and maybe the head of sales and that kind of stuff. So I think you have to spend a lot of time as an investor working with those companies. I spent an inordinate amount of time with Intelligize, sort of pushing that forward versus other businesses that we have, and even other businesses that we have in fintech. So I think that you just have to be prepared for that as an investor. With that said, the people you work with tend to be incredibly intelligent, and more so than almost any other business that's out there. So if they're at least have some sort of, I don't know what you would call it, they understand themselves and understand their weaknesses, that tends to be good. We have worked with lawyers and other businesses, founding lawyers and other businesses in medical devices and other things that we've done, and it's been fine. So I don't shy away from it. You just need to know that there's going to be a lot of hand-holding, but there's also going to be a lot of, you have to recognize none of us are the smartest people in the room. It's generally the customer, and it's generally other people that you really got to service.
Alex, does that resonate with your experience in the legal related deals that you've done?
Absolutely, positively. I hate working with a company that's run by a former lawyer. Absolutely.
They can hear what you're saying, right?
That category.
We're all right here.
Yeah, okay.
Yeah, I made all my mistakes. I'm good now.
No, I think also, having been on really all the sides, and having made that transition, Jules, you said something. I didn't hate raising money, but that's personal taste. But you have to be in for the slog as the entrepreneur, even in the best of circumstances. It's a holy slog. The successful companies, it is. It's all glamorized in movies, but when you're on your 18th hour, it doesn't look the same way it does in the movies. But I do think, when you look at investing, and this is something I look at carefully in the stuff I do, and we look at it even at Burford when we're looking at litigation as an asset, is what is the entrepreneur? What are the characteristics, right? They're not really soft. You think of them as soft things, they're not. Is the person coachable? Does the person, kind of have a yearning to learn things every day? And the challenge with lawyers is not necessarily that people who go into it don't have that characteristics. It's that law firms kind of beat it out of you a little bit. And so you've got to step out of that box, right? There are plenty of lawyers who didn't go into a law firm that way. And so the question we always look for in whatever we're investing in is, does that entrepreneur, when it turns out the product isn't working, do they know when to try something else, right? Do they know when to pivot it? In that example, right, it may have been obvious that it was GDPR, but it may not have. Interestingly, you talked about Intelligize. So, and you said it was about clauses. So when I was at Bloomberg Law, we sold against Intelligize not successfully. One of the things we learned actually is when you're in that market, what did they do very, very well? And they hammered their competition. They were all about their comment letter threading. There were very specific things they did. And you couldn't displace the product as a result. So they had learned, even though and it's funny because we thought of them the same way you did. You'd go in the room and say, like, that's what they do. That wasn't, they figured out along the way what to sell. They kind of pivoted along and got it.
We also figured out when you get the SEC as a customer,
Yes.
every law firm has to have it also. So when you look at these things, if you could get both sides of the equation working for you, the regulatory bodies or whatever it is, if you're in that space, and you can sell to the customer, people will buy it.
Sounds like it. I think we've got a question from the audience.
So, where's the big disruption going to come from? I mean, I think the point you made earlier about law firms being the most successful professional services industry ever because partners are still making tons of money because they're horrifically inefficient. And who's going to challenge that? To say the whole model's broken. We all know that, those of us in the tech space know that if they actually embrace technology, most of them would be out of a job. Yet you're selling to that market and you're trying to take incremental change. Is there disruption out there somehow?
No. So the reason I call it evolve law instead of disrupt law is that I don't think legal will be disrupted and completely radically changed like other industries will. It will fight kicking and screaming to hold on to a lot of the legacy things. So you've got to have incremental, although fast incremental change and evolve the industry as fast as possible. But it's not going to be demolished like the taxi industry or like some of the other industries that tech has influenced and disrupted. I just don't think that's going to happen.
CNN, sort of like a CNN follow-up.
Wait, can we level set?
Just one question. Fake law. But maybe, I mean, just throw this out. I think maybe that's part of the problem, which is, I mean, I tried to do something disruptive and I failed, so I'm, take a bullet. But maybe it's because we think it has to be incremental that we're not seeing the kind of change. I mean, I really don't see much of any change in big law practice in the last 15 years, especially in this world. Christian can tell you, I don't think David Polk is practicing law much differently today than they did 15 years ago. So I'm just throw that out there, that maybe it's because we're thinking about it in increments as opposed to disruption that we're not seeing the kind of take up there.
Okay, you got to level set this, guys. We talk about disruption as if the successful outcome would be to end life as we know it for the AMLA 200 firms. That's not. That is not. Why that's the outcome we seek, I don't know. And by the way, as a consumer right now of large law firm services, the reason we consume them at particular firms is because they're very, very good, and in many instances, better. And there's been plenty of change in law. It looks very different. I started practicing in 1994. The practice looks different at the associate level and the partner level. It's the assumption, you're making an assumption that disruption equals the Dentons of the world will be less profitable because they're inefficient. If you look at some of the great industries, pure tech, they have disrupted in many ways, but it's not straightforward. Okay, so if you look at, I worked at Monster.com. It's a name no one knows anymore. Okay, everyone recruits through LinkedIn and okay, but it was at the time incredibly, incredibly disruptive, right? Did we disrupt executive search or recruitment agencies? No, we did not. Who paid for it? Anyone know who we disrupted? Newspapers. Yeah. So if you went at it and said, oh, we're going to go disrupt the recruitment industry, you got it upside down. The net effect of online recruiting was the newspaper business went to hell and never recovered. Okay, there are no ad revenues at newspapers because people don't place that's the model. It fell apart. eBay killed the classifieds. We killed the help wanted one by one by one. No one set out to do that, right? eBay didn't say we're going to put the penny savers out of business. So it's what are we? Is disruption the goal, or is we want to solve someone's like I love your example because there's a giant problem in GDPR, right? Why is fintech so big, right? Anything you're looking at in fintech, why is it so big? If you talk to anyone who does anything in fintech, they'll always use the word spread. There's some spread, at which someone is borrowing and someone is lending, right? Or some spread at which someone is buying and selling. And if you look at Wall Street or you look at anything in finance, it's giant, right? That's why people in finance all make a lot of money. Everyone in fintech is playing in the middle of that. They're not looking to put Goldman Sachs out of business, trust me. Like, I'm on the board of a fintech company. We don't worry about Goldman Sachs. We're trying to figure out how do we narrow that spread for a narrow slice. So I just think you got to kind of reframe it and say, what am I trying to solve, as opposed to saying I want to put large law firms out of business. That's not the goal. The goal should be to make money.
I was going to pick up on that because people think disruption is elimination. Uber has dramatically disrupted the taxi industry, yet there are thousands of yellow cabs driving around this building as we speak. It's changed the economics. They've come at it with a different business model. So it is going to be an erosion. Uber's probably more likely to discuss the car manufacturing industry because of the sharing economy is impacting incremental growth. But I see some pretty substantial changes, and it's important to get outside the U.S. The largest legal market in the world, but with all due respect, maybe not the most innovative because it's more regulated than some other international markets. Jules mentioned the big four accounting firms. When you go to other markets around the world, I look at 160, the big four are some of the largest law firms in those markets, right? They have a totally different economic model. Their ability to cross-subsidize into legal, to access capital markets, to adopt tools and technologies, which they're pretty good at. I see them driving the acceleration of the adoption of these tools, but also fundamentally challenging, the billable hour, which has this productivity paradox embedded in it. So I see them driving a lot of change. I see some of these legal tech companies. LegalZoom bought a law firm in the UK because they can. There's a lot of these markets are probably, Canada has some amazing AI going into legal tech because they have that capability center around the University of Toronto. So it's not going to eliminate big law firms. Our prediction is that we think the industry structure is going to evolve. It's not going to get the big four level of consolidation in accounting where the big four have more than 50% market share, global market share, but we are going to start to see a polarizing where the big are going to start getting bigger. My biggest investor has 8,500 lawyers, and stay tuned, right? There'll be hundreds of thousands of small firms specialize in a geography or a niche, but death in the middle eventually. I see mid-sized firms, 50 to 250 lawyers, because they have diseconomies of scale facing some real challenges. There's always going to be plenty of firms in there, but where's the growth, right? Growth is going to be big, growth is going to be small and specialized. I don't see growth in the middle in terms of the industry structure. So I see it evolving and continuing disruption, but it's a great time to be a lawyer, and I'll come back to that.
Well, one note, if you
What's that?
If you read that article yesterday, 2 days ago, the general counsel of Coors wrote an article. A lot of people have been circulating how they're using a lot of these more regional firms. We talk about the disruption, right? The answer, and advanced law kind of brought that into the mainstream, but the answer to them is, in large part, they can get the same quality. Why can they do that? That's technology. They're able to use firms. You're in Colorado. They specifically mentioned they're doing it out of Denver, where they were head-to-head in a major arbitration against a New York law firm. The example he gave is the expert on, but he wanted an expert. The GC wanted an expert, was in Colorado, and he said, with the technology, we don't really care. So there's disruption, but there's still, it was, now interesting, I think it was Ballard Spahr. It was the firm, it was the Denver office. It's still a 700-person law firm, but it's incredibly disruptive that they are able to handle a large arbitration against, he didn't say who the other side was, but it was one of the giant New York firms. So it may feel like, incremental, but that's a bit of a sea change for that to happen.
I think we got a couple of other questions in the audience. There's one here, one over there, and then one here.
Hi, so I come to legal tech from eDiscovery almost 11, 12 years ago now. And I'm curious about why, it seems like the new tech companies in the transactional space haven't seemed to learn very many lessons from eDiscovery. Or maybe I'm wrong, and maybe I'd love to hear your opinion about whether or not you're seeing learn those lessons. Lessons about selling into large law firm as an enterprise, and just understanding the legal tech space, and even how to talk about and explain some of the machine learning principles that we were using, again, 10 years ago that are sort of posited as brand new right now. And if you see sort of what happened in eDiscovery, say in 08, 09, as a sea change? Because it's funny to hear people say nothing's been happening, but I see that as, I went into big law firms in New York back then who we turned from going to boxes to online binders within a year, and I thought that was a major change back then. But it's funny to hear people today say nothing's happening, there's no change going on. So just two-part question: why does this, not this community in particular, but the legal tech community currently sort of not seem to acknowledge that space? Why do people see transactional and legal tech on the litigation side so differently? And do you think there actually are lessons to be learned there, or are they so different that this is a new wave?
Great question. Who wants to jump in?
I think lawyers, I think in general, lawyers see litigation differently, right? So your corporate lawyers and your litigators are very different people and very different within an organization. So I actually think, I tend to disagree on the no ability to disrupt, because I actually think there's still a lot of disruption left in litigation. Correct. And there's a lot of disruption left in litigation because of the sheer size of what you talked about, money. So you're sitting there and you're saying, how do I choose to finance your litigation? Well, there's a set of tools and a set of data that you probably need to look at and would love to look at more granular detail. If you're the lawyer representing somebody and you've got 3 million documents to go through, how the hell do you tell that story? Well, you've got associates and you've got certain types of technology now that let you get through them. But I can tell you from being in 2 huge litigations, it's not that good. It doesn't really, they charge you a ton of money, they load all the documents, but it's not great, right? There's still a lot of room. That doesn't mean it's not good, but there's still a lot of room for improvement there. And we're talking about, I mean, I don't know, how big is the litigation market in total? Forget about the lawyers' bills. I'm talking about the amount of money that goes to plaintiffs and defendants. It's enormous. So to me, that's an area that's ripe for a disruption still. And I don't think anybody's nailed it. And so, but I think that the reason why it's different is because the lawyers are just different. Litigators are just a different set of, they're just very different than all the other lawyers that I work with.
I think it's a very good question. I think some have adopted it. Maybe more on the services tech, on the consulting side of tech. The other challenge, and there are good transactional products out there with good sales teams that have adopted e-discovery techniques. There's a different cadence, but one of the challenges, to be frank, having been in this industry, and our early people came out of applied discovery, right? So we figured those people learned how to sell. Today, if you try and extract a really talented e-discovery lit software salesperson or sales leader, they're too expensive. So, I know these people, we all know these people. A startup, when you're trying to extract a really top person in a big city, I don't know, right, Jules, you live this, got $500,000 a year, because that's what they're making, right? And by the way, the ones, plenty of them are making that, and we tried, I'm on the board at Integron, we met a woman, she's dynamite, phenomenal, okay? She already makes $900,000 a year, right? How do you show her a path that our thing is significantly different than that? That's still plenty of money in any world. And I think that makes it very hard to pull people. It's a much bigger industry. It's more mature than lit. It's more mature than the transactional side, and so you can't extract the talent. You can learn the tools, but the people who have the experience and the contacts are harder to extract.
Sounds good. I think we've got a question here.
Hi, my name is Tanya Soros. I'm an attorney. My question is posed at David. You mentioned that in terms of legal tech, you can either, David Perlet. You mentioned when it comes to legal tech, you can either solve a problem or you can, it's either pain or gain. And I can understand where you're coming from because you're talking about either ROI or cost. I wanted to know in terms of fee structure, like Alex mentioned that ideally there should be a flat fee. But when you're using legal tech, you're improving efficiency and you are, to a certain extent, eradicating the work of a junior associate and you're reducing billing time. And there's an inherent conflict of interest with the amount of time that you're billing and legal tech. Like, how do you cross that chasm? Like, what in your experience practicing law and meeting the people that you'll be meeting?
So I can't address the billable. I mean, I billed hours for 5 years. I would look at it from the from the standpoint of the customer, which is the easiest way to look at everything. If you get lost in the discussion, what is the customer? So when you talk about the billable hour, right? Whose pain is that? It's the customers, right? So ultimately, go ask GCs and go ask end user clients. And what I would tell you is the pain they are feeling is not as acute as they may be telling the newspapers or the blogs, because the amount they're paying law firms at all levels, at all geographies, remains very high. In other words, they're either willing to suffer that pain endlessly, or, unhappy as they may be, they still think the billable hour or the model works, right? So whether you think it's incremental or not incremental, the changes, there's plenty of people hacking away at that, right? Who are saying there are different models for giving, then that's what the article is about, is you don't need to hire a New York law firm for everything. But the pain is not, in that case, the large law firm's not feeling the pain. So I don't look at it and say, well, how do you resolve the conflict? There's not a conflict. I was a large law firm lawyer for 5 years. It's not a conflict. I didn't churn my hours, and I was trying to learn things. I was trying to do as much work as possible. I actually don't think most law firms churn it. I think there's some built-in inefficiencies. I don't know that there's a conflict there, and if there is, the clients will tell them, I won't accept this anymore.
Could I just pile in? Because faster, better, cheaper is our motto, right? And it's happening. So if you fight it, you're going to lose. If you embrace it and own it, you're going to win. And you're going to win in three ways. If you adopt these tools and bring them to your clients, or the corporate department bringing to your clients, you're going to win more competitive panel situations. The Dentons partner took one of our tools, Aperio, in a three-way bake-off for a big litigation matter. He won it because he brought them the tool. And the client goes, I want that. And the other two law firms said, we better get that. So you're going to win more work. You're going to grow your share of wallet. I met with the GC of a global company the other day, and she said, you're bringing us stuff other people aren't. Their billings, this law firm went up 25%. And the third one, and most important one, is, how do I say this tactfully? Parts of your job suck, right? It's not fun staying up all night reading contracts, finding the assignment clause, right? The machine can do that better than you. It's not fun chasing down signatures. It's not fun creating digital files. Your fulfillment and your enjoyment can go up dramatically if you adopt these tools and technologies. You'll win more work, you'll grow your share of wallet, and you'll have a more fulfilling and exciting kind of career opportunity. And so I think it's a win-win. And the neat thing is, you have competition in some cases who don't get it. I'd love to have competition like that, right? Because you can clean their clock. There's a nicer way of saying that.
I'll give a quick personal example. So I think the billable hour will hopefully be reduced as the main mechanism for billing, but it's not ever going to go away. And I think we need to understand that. But as a client, you need to understand what the client's view is. So for example, at LunaCap, I was managing our legal work, and we had our law firm, we invested in a LLC instead of a C Corp. And so I send the docs to the lawyer to say, hey, can you just make this for an LLC? So I got a bill back for $5,000 that was literally a find and replace on changing the word shares to units. And I was like, I'm not paying this. This is ridiculous. Like, this is a find and replace. This is something you can easily do with the tool. It ended up leading me to using ValQ, which is I basically put all of our legal docs and coded them into the system so that I could generate the first version of the doc by putting in the keywords that were going to be in there, the deal terms, whether it was a C Corp or an LLC. So I generated the first version. The law firm wanted to review everything in a way that just completely destroyed the efficiency that the technology brought. So I think if you're smart about it and you say, okay, let's use technology to maybe be a starting point and then do the billable hour on top of that, I think you need to have a rational discussion with clients. So the billable hour is useful, but you have to embrace the technology that reduces it, especially in the stuff, like you said, that you don't want to be doing anyway.
Right. We try not to look at our attorneys as adversaries. I mean, I get that from a lot of the questions and some of the comments we're making up here. We don't look at our lawyers as adversaries necessarily, but just like the purpose of a contract is to assign risk, I think I would much rather have my lawyers deal with the question of how to squeeze more legal dollars out of, or squeeze more profits out of the legal dollars I'm willing to pay them, than me hammering them every time I give them a bill, which is why we talk about a fixed fee. I'm hoping they're making a profit. I'm sure they are, because if they weren't, they wouldn't agree to the fixed fee. But our lawyers are important partners of ours. I hope they're not. Hope we're not screwing them. So.
I mean, you guys are billing, right? How often do your bills at a client go down? I don't think it actually goes down. So if I'm Microsoft and I'm hiring outside counsel, I want all that grunt work to be done by a machine, because I want more hours from you on the stuff I need you on. So I know that I have a budget. I'm going to spend my budget. And we see this in medical devices. We see this in the legal space. We see it across the board. People have a budget. They want a better solution. They're still going to spend their budget. So you guys are still going to get your share. But at the end of the day, it's better that you're getting your share to, do the higher level work, because I'm really satisfied as a client. So I've got 2 big litigations that I've done, and having the right set of tools, I'm psyched. I'm still paying, I paid $10 million last year in legal fees in 2 big litigations. And, it didn't matter, because I got a better work product, because they found systems that worked well for them. I wasn't trying to cut the fee. I just needed a better outcome.
And your lawyers can give you better advice.
Yeah.
And you're more happy with them and less inclined to move to a different firm.
Yeah, exactly. I mean, we hire lawyers for a reason, right? We can't do that ourselves. We're not smart enough to do that ourselves. So.
All right, we've got a number of other questions. I'm going to slide in one last moderator question before we go, because it's something I want to hit for you guys, and then we're going to, we'll take a couple more questions and wrap up. We talked a lot about where the money's coming from. We talked about structural incentives. We talked about a lot of stuff. Briefly, if you guys can, for the legal tech entrepreneurs in the room, I think we probably about a quarter of the people in this room are people looking to build things and design things. In light of the things we've been discussing about, what should they be building? What should they be looking at? I've had conversations with a number of you. Dan, when you were on the podcast, you talked about there's just so much low-hanging fruit kicking around, and it might not be as sexy as other things, but it's a really good business if you could get in there and do it. What would you guys recommend? Somebody out here looking for the exit to a law firm wants to start something, what should they be doing?
I said it earlier. I love the revenue side. I love any business that shows someone how they make money. Partners have money, they have budget, they will pay for something that has some reasonable chance of getting them more business, whether that's data, whether that's a model, a process, a combination of all of that. If you talk to anyone who's in the biz dev training business, and you see the amounts of money that partners will pay to be trained on it, you get a sense they're very willing. But no one's really focused on it because it doesn't look sexy. It's sort of like sales for law firms. But Salesforce.com proved there's unsexy things that it wasn't around. When did the company get created? 2000?
Yeah.
Right. You think of it, it's been there forever. I was on version 1 when we started Pangea 3. Someone said there's got to be a better way to track all this stuff than spreadsheets. Right? And Mark Benioff. So I think the top line side of large law is ripe to be explored, and the firms are asking for it.
But I guess what I'd add is, don't take this wrong. I really don't want to see your demo. We'll get to that later. What I want to hear is, what problem are you solving? Is it a real one? Are you compelling? Is there a value proposition there? And then I want to hear about your business model. Is it rational? Does it make sense? And then I want to hear how you're going to sell into an industry that has 18 to 24-month sales cycles into big law and large corporate departments. If you can answer those 3 questions for me, yeah, let's take a look at your demo, because I know you're really proud of your demo. It's awesome, right? It's got bells and whistles, and it sings and it dances. But if you can't answer those other questions, it's not relevant to me.
Anyone else?
Yeah, I mean, I think about connectivity across your law firm. You guys are, especially big law, right? You're distributed in multiple offices, oftentimes around the world, with talent all over the place. And how do you actually leverage that talent? It feels at times it's sort of one partner knows another partner, so they call them and they bring them in and so forth, versus really being able to look at the collective intelligence in an organization and pick off, when I'm setting up whatever team or just trying to get knowledge, being able to say, the woman in the UK
that has handled XYZ clients because you're able to look at this in a system, that's going to be the right person to bring into Walmart today to answer this question. And if you can do that, leverage this collective resource in a really interesting and unique way, I think you win. I mean, look at what Slack has done, right? You know, Stuart started this thing for his own internal video game or whatever it was that they were designing, and this thing connects everybody together across the size of the organization. And so you guys have to start thinking about yourselves. We're big organizations. How do we work more efficiently throughout the whole thing? So I think people who are designing technology that helps lawyers do that or helps law firms do that will make money.
So I think there's two parts to this question. Number one is build what you want, build what you care about, build where you have an unfair advantage because you know the industry more, whatever it is, where you're going to make the company more successful than someone else who would try to start a similar company. I think maybe the better question for a panel like this is when do you raise money, or what do you want to build to raise money? I think a lot of legal tech businesses cannot scale in the way that we need as venture funds, you to scale and exit, in order for us to make money and make our LPs happy. So I think the bigger question is, do you run to raise venture money for the thing that you're doing? And the criteria, I give a presentation about this as well, but the criteria I would look at, especially in legal, are what are the multiples that companies are getting bought at? Maybe it's 2x revenue, 3x revenue. If you want to be a $1 billion business, that means in the legal space, can you make $500 million in revenue in 5 years? Because that's what we're looking for. If you can't, maybe it's 100 million, you're gonna have a $200, $300 million exit. Like, model out what the outcome will be for your company, and don't raise venture capital if you cannot achieve that outcome in a big way in 5 to 8 years.
What about raising less, right? You guys, like, legal tech entrepreneurs have to understand they're not the same as fintech guys that go out and raise $100 million for a business. You need to be lean and really get this going and raise as little money as possible within the realm of reality here, because ultimately there aren't a lot of I don't know if there are any $1 billion exits, probably none to date, but there are a lot of $100 million exits that are out there that you can grab. And if you raise $5-7 million, $100 million exit is pretty good for the investor, pretty good for the entrepreneur, and everybody's happy. And Lexus or Thompson or whoever's buying them, is pretty happy as well. So.
Excellent. Okay, I think we got about 5 minutes left. There's a number of people who've had their hands up. So our microphone's right here, and then we've got a couple of others. We'll get to you, Charlie, James, and Jonathan. We can.
Hi guys. Thanks again for the insights. It was great. Ben Truboga from Legal Sifter. So I have a comment. By most conservative standards, I think the numbers are that 90% of the legal services are underserved or not served at all. So the pie is very, very large. But a technical question, I guess. It's been 10 years since the UK Legal Services Act, or the Alternative Legal Service Act, has been passed. I ran across an interesting stat, which is since that time, only 700 alternative business services have been founded, but 75% of them have been founded within the last 3 years. And so the question is that a leading indicator of things to come, considering that alternative businesses are sort of popping up very quickly? And then do you have any read on what law firms are doing today in terms of wholly owned subsidiaries or wholly owned tech subsidiaries that they're spinning out? I think of Gravity Stack or anything like that. And Dan, I just sold the PNC, so I think we should have a conversation after. That's great. Thanks, guys.
Well, I'll start. I'll just pick up one piece of your question. Is we love the UK legal market. 3 of our 10 portfolio companies are based there. We think it's one of the most competitive legal markets. We see the highest adoption rates for the tools and technologies of our companies in the UK legal market. And so obviously the US is the largest legal market, but the UK legal market we see doing some very progressive and interesting things. One of the reasons they like us as an investor is we say, all right, where do you want to go next? And if they want to come to the US, we can help make that happen with our subject matter experts who can help them with the product market fit. But it helps when they kind of have some base load built over there. So I know that was only one little corner of your question. The others may want to pick up on other pieces.
So I'll tackle 2 pieces. Number one is it a leading indicator? Meh, I don't know. I think that, so there's a good answer for you. I think that the bigger indicator is PwC starting a legal services group out of Washington, D.C., which also does not have the same restrictions on non-lawyer ownership of firms providing legal services. I think you'll start to see more of that. I think it's interesting. I wouldn't put into your business model in the short term that that's going to happen in the U.S. Right? So that's what you're relying your business to be successful on, because we're going to have more ownership of other in the U.S. from non-lawyers, and there's going to be more innovation. Don't bank on that in the time frame that you have to build a company. The second piece I'll talk about is what law firms are doing to spin out some of the stuff they're providing in-house. It's really interesting. I've seen quite a few examples of law firms coming to us going, okay, we've built this thing, now what do we do with it? Can you help us hire a CEO? Can you fund it? Like, what do we do? And there's some really cool stuff coming out of the law firms, but they're not in the business of building businesses. So I think there's an opportunity there. I don't know what it is, but there are some people spinning them out. There's companies getting funded. It's going to be weird to watch. So I guess stay tuned, but I think there'll be more of that happening inside of law firms, and then trying to figure out how to put it to a broader market, which is a tough sell, right? If you're building something in-house and then trying to sell to your competitors and peers, then there's weird issues that you get into. So I guess my answer to both of them is I don't know, but it'll be interesting to watch.
Let's pick up a question right over here.
Hi there. Thanks for a very enlightening discussion. Here we are in New York, the epicenter of big law. The area where private equity guys can say, I don't care what my lawyers charge, because it's a rounding error given the size of the deal. My question is, are you, any of you, men and women, looking at the retail side of law? Not necessarily pro bono, no, the profit-making side of not the AmLaw 200 or the AmLaw 500, but the moms and pops of law firms that are dealing with people. Are there investment opportunities there, which obviously can scale, or is that just really not where it's at, and we have to sell the big law if we're a startup?
So we looked at it when I left Bloomberg. My P3 partner and I, Sanjay, looked at it. I think there are definitely opportunities. My take as someone who worked in big law and we sold to big law was it would need different expertise, and that it would need a lot more digital expertise than I had and kind of our cohort had. That to reach retail, whether you wanted to sell, I mean, we talked about this, I think Jules and Jeroen talked about like the H&R Block for law, and there's all sorts of, and they would be franchised to lawyers only. The distribution model, it gets to CAC, customer acquisition cost. It really has to be digital. It's the only way to get to them. So that's Avo's model. Clio's got, I think, a really interesting platform model. I think there's plenty of opportunity. If you come out of big law, you're going to have to overcome your biases. And for me, I'm not young enough to have refigured that out. And you need to understand digital. I think the other challenge in retail is as follows, and it's sad, but you mentioned 90% of law isn't. I forget what your stat was. They don't.
Basically, demand it's only 10% of demand is actually met.
Okay. So when you hear this, like there's all these legal needs. So there's plenty, and there are plenty of companies that have identified there's 7 times in your life as a non-corporate citizen that you need a lawyer, right? You need it when you need a will, a divorce, God forbid, a bankruptcy, a death. You buy a house, you sell a house, etc. Okay. Here's the
Tax
issue.
man.
Tax man. And so there have been plenty of companies that have tried this, and it's a very noble effort. It's a very interesting effort. They've tried to do it with subscriptions. You've got it with Legal Shield. Here's the challenge, which is the law, and we should give the American judicial system and the American legal system some credit. The law, for the vast majority of people, the fact that you're not using a lawyer actually doesn't necessarily cause you a problem. So if anyone ever gone to small claims court in New York? Okay. So it actually favors not using a lawyer. If you're a corporation, that was the worst when I was in-house and you had to go down, someone would come after us in small claims court. It's very much built for the small consumer. It's very much built for the tenant, not the landlord, right? Landlord-tenant court, very much tenant-friendly in most cities. Estate taxes are such that it kind of, unless you're really, really wealthy, it doesn't much matter if you have a will, as long as you don't want your kids not to get your money. So a lot of the default, no, it's true. It's true. If you don't have $10 million, okay, and you die without a will, yeah, it's got a probate, okay. But your kids are going to get your money. First your spouse, then your kids. The law has solved a lot of this. So for the vast majority of these, yeah, if you get arrested, get a lawyer, right? But otherwise, you really should. I don't know from experience. But we've solved that. So while you would say, well, there's this real crying need, for many people, there really isn't. They can interact with the legal system in ways that don't require lawyers. And in fact, here's what's so interesting to this conversation. When you deal with small retail law, you've got two things that disfavor a business that would change it. Number one, it's almost all fixed fee. So my father had a shingle in Brooklyn, I had it, okay? My dad never billed an hour in his life. Everything he did, divorce he did, every time he represented someone who got arrested, everything he did was there was just a bill. The other problem is it's extremely local. People want to go to who they know, and they do it through referral. And if you ask them, is that a problem? Because we did this. We did a lot of interviews with people about retail. They sort of felt like, yeah, it's not an acute problem. I don't feel like I need lawyers on retainer like a legal shield. And the time I needed a lawyer, I asked my sister-in-law. She gave me a good lawyer. And so it doesn't feel like an acute problem that the users have today.
David, a slight CNN follow-up very quickly. Instead of selling to the consumer of legal tech, how about sales to the law firms at the smaller end of the market?
Can I comment on that? Because that's what I was going to add. The reason we see an industry structure of polarization is some of the arguments I made, but the proliferation of the smaller firms that are probably serving local corporate clients and rather covering a geography or practice area is because of what we call the democratizing effect of technology. So a lot of these tools and technologies are capturing some of the expertise of big law and making them available to very small firms. One of our companies is Ross Intelligence. We have 20 law firms that have been teaching the machine. It's an artificial intelligence platform, every practice area of law. And it takes years to teach the machine to do all of those things. But now its confidence intervals on its questions is getting in the bankruptcy area, let's say. Does a deed restriction on workforce housing vacate under a bankruptcy in Chicago? The machine is coming back with very compelling legal memos with 90+% confidence intervals, as if you had a mid-level associate and a paralegal working on it for a week. A two-man shop can now answer those questions. And so we think those small firms are going to be able to use, and I can give you 10 more technology examples, where the big law expertise and that KM is being democratized and brought down to the smaller and local firms. But you may want to...
I think the answer is yes. It's all about your distribution. So we, whether it's through bar associations, there's a company we really liked. We liked the entrepreneurs, but they were kind of second or third in. First question we asked was, are you on Clio? And they're like, yep, we have a deal. I mean, Clio has great distribution to the law firm. If you're trying to go direct yourself to all these, I don't know the stat anymore, but there are hundreds of thousands of solo and two-person shops in the United States. It's too hard to go, so you need an aggregated distribution model. But helping small law firms is an amazing model, particularly if you want to feel better about what you're doing. You can touch it and feel it. It's just a different distribution model. You can't go door to door.
I'll just add one more thing, is that it's a good business. If you like that business, you want to sell to consumer, you want to sell to a small and mid-sized law, do it. Do you want to raise money on that business is a different story. I think it's harder to raise venture capital selling to that market for a lot of reasons. First of all, from my personal experiences, I can't help you as much, right? I can help make introductions to big law, I can help make introductions to large in-house counsel, but it's a lot harder to tackle that, to add value as an investor in that more distributed market. It's also hard, it just makes it harder to raise money. The last thing I'll just mention around that is if you are building a company, be really focused on what your market is. The companies that really drive me bonkers that are in the legal space are like, we can sell to in-house, we can sell to a small firm, we can sell to a law firm. They're two different businesses. Selling into those markets are very, very different. So you've got to focus, pick one and knock it out of the park, and maybe you can expand into the other one eventually. But pick your business and know how to finance that business.
You need a lot of money too. So when you're selling to distributed network and/or consumers, you tend to need a lot more money from your raise. And there still hasn't been a tremendous number of bigger exits in that space, so that chasing the long tail is really difficult. And whether you're going to the small law firms or you're going to the individuals, I just think it's really, really hard.
Right. What did Avro's raised? You would know this, Jules. They've raised 70, something like that.
Yeah, well, they had an exit to private equity.
Right. But it was an enormous,
Their
enormous amount of
2015
money.
round was like.
Right. They had to raise a lot of money because they were doing exactly that. Whether it was successful or not, but your point is exactly right. You know, they focused on their niche. It cost a lot of money.
Perfect. Guys, we have.
That poor guy's had his hand up.
We
the
got
whole
one.
time.
James, give us a quick one.
Better be a good
Yeah, sorry. So my question's actually more. Yeah, whatever. I guess my question is more on the, as you think about being investors in the space, I think there's sort of, I've heard a little bit of a tension between the idea that barriers to entry means winner takes all, disproportionate returns if you can crack the space, versus still seeing not great multiples. And so I wonder whether when you look at other I guess enterprise sales, maybe specifically to non-legal firms versus someone who's trying to sell to a legal firm, do you haircut your heuristic and say, two customers that are lawyers, given how hard it is, how long the sales cycle, it's like worth 5, and I give credit and I see disproportionate returns? Or do you just say, you know what, obstacles are actually just obstacles and this is not as good to invest, and 5 million in sales to a law firm is the same as 5 million in sales elsewhere, and I treat them equally?
I think it's the same as other industries, except for 2 or 3 times longer. So you just have to change your time horizon.
I'm not convinced yet of that. Having sold extensively, I think we discount the difficulty of selling into other industries. Meaning, I'm not suggesting it's easy selling into law. I just, having sold other stuff, sales cycles are long. They're just for startups. Right. So when you're actually pitching, if you're doing digital, it's different. You know, so you got to plan on a long sales cycle no matter what.
I think the dollars are pretty big though in this space. So it's rare that you're going to get a $500,000 or $1 million customer as a small little startup in software as a service. Right. In legal, it happens.
And it depends on the industry, though. It depends on the industry. We have investments in a lot of enterprise sales companies. The company I talked about earlier that is focusing on GDPR, their average ticket to a large enterprise is $250,000 to $500,000, and they're moving upstream as they build out the product. The sales cycle is immense, just like it is to sell to a law firm.
The one thing I'd only add is, you know, there is a revenue arbitrage opportunity here in that $1 of professional services revenue is valued much lower than $1 of SaaS revenue, software as a service, a recurring revenue stream. You always hear about monthly recurring revenue and annual recurring revenue. So an enlightened law firm can take $1 of professional services, and if it can turn it into a SaaS contract, their balance sheet just grew. Now, as Joel says, you know, 2 to 3 revenue multiples aren't great, but that's a heck of a lot better than what selling professional services business earns.
Fantastic. All right, I want to make sure we have to be out of here in about 15 minutes. They're coming in, and I want to make sure we give everyone an opportunity if they have a question they didn't want to air in front of everyone to ask it of these guys. So please join me in thanking them with a warm round of applause.